Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Many of you may be wondering what's happening with tariffs and why are they creating such market volatility. President Trump, known for his negotiation tactics, is once again using tariffs as leverage to secure favorable deals. We saw this earlier with Colombia, and now Mexico and Canada are in focus. The recently announced 25% tariffs has been deferred for a month after negotiations led to agreements including stronger border protections for the US. The impact on markets yesterday was significant, fueling dollar strength, while emerging market currencies, including the rupee, weakened under pressure. After the tariff relief, there was a relief rally in most currencies against the dollar. Good morning, JK. This is something we have flagged since Trump's election. How do you see things unfolding with China now?
Good morning. Good morning, Swaraj. Yeah, it's been a fast and furious frenzy in the global markets in the last 24 hours, I would say. And everything is led from, the Trump administration's decisions on trade. For quite some time, we've been, I think, ever since prospects of Trump's election was getting brighter, market has been focused on tariff imposition. And of course, possibly some countries believe that this may remain a threat and it may not eventually happen. But by actually imposing these tariffs on Saturday night, Trump showed them how serious he was, and that brought them back to serious negotiations yesterday. So while the markets did react very negatively after the imposition on Monday morning, the developments later in the day have really given some good optimism for de-escalation on the tariff situation. So we saw the tariff imposition on Mexico being postponed by a month, and that led to Mexican currency rallying back. And then while Canada remained skeptical about a similar position on tariffs on them, there were continued discussions between Trump and the Canadian Prime Minister. And finally, it seems that even for Canada, they are postponing the imposition by at least 30 days. So what is happening is that Trump administration has allowed more time to negotiate harder. It appears that the administration is fully conscious of the negative effects of trade wars, but at the same time, Trump has been really serious that tariffs are going to be the primary tool to achieve a number of different things. So it's not just one or two issues, because now America will continue to buy goods from the other regions, but it doesn't come free. So he wants to negotiate and get something in favor of the US, although he cannot afford to import them at a higher cost and get the inflation higher. So that seems to be the tactics. Now the question remains about China and Europe. Now China during the Asian Times said that in retaliation for any tariff, they will not devalue the yuan. That itself gave some, breathing space for the market. At the same time, they also said they would challenge the levies at World Trade Organization. China market is not yet open. Mainland will open only tomorrow after a week-long new lunar holidays, and we will see how the yuan fixing happens tomorrow. And yes, of course, Trump has also stated that he will be talking to China over the next few days. Although he also said that there are many things that he is expecting from China, and if it does not fulfill even the 10% is only a initial salvo, and it can go up even further. Now that leaves the European Union. Now Trump said over the weekend that tariffs on the European Union will go ahead, but did not say In the meantime, European leaders, in a summit in Brussels, said that they would be prepared to fight back if tariffs are imposed, but they also called for reason and negotiation. So now it does appear that at least from the market reactions that we have seen since in US Open yesterday, that there is a lot of optimism in the market, and market believes that eventually the trade wars will be not as serious as it was initially thought to be, and therefore they have recovered quite nicely, at least for the EM currencies and the euro, even the Chinese yuan also, and even the stock markets today in Asia have been higher, even though the US markets ended on the red, but much of the losses initially seen have been eroded. So there is some positivity to the market today. Definitely, it does appear that market has seen the worst, at least on this issue. But we'll keep an eye on what what goes on next. In the meantime, we had a very strong number on ISM manufacturing from US. Once again, I know turning into expansion territory. Employment was higher at above 50, coming up from 45 last month. Construction spending was higher. New orders jumped to 55 from 52. These are the indices, and prices paid were much higher at 54.9 from 52.5. So the overall report was very good. So combined with the slightly optimistic news on the tariff, the yields have jumped, but at the same time, dollar has also given up some of its gains. And if you look at the chart formation on the dollar index, it does appear to be some sort of a hint of reversal, and of course, it will be further confirmed if we have a lower close for this week. It's too early in the week, and let's not forget that it's going to be a very busy week for the markets. And it, we have a host of labor market data from US, which is very key for the policies. Although some of the Fed members who spoke yesterday, they were quite focused on what's happening on the tariff front, and so that they are not discounting an influence of these tariffs news on the inflation, and therefore they remain very cautious about the rates going forward. So on the dollar, I would think that possibly some more one more bout of correction, if not a larger reversal, is possible. If you look at the Canadian dollar itself, it almost hit a high of 1.48 yesterday, and it's now at 1.44, almost a 2.5% drop in the dollar there. And similarly, Mexican currency, which was down nearly 3%, is now up 1%. So I think markets are somewhat getting more sober on this issue. Now, coming to rupee, we had one of the record intraday moves, or rather, I would say, largest move compared to the previous day close. Having closed at 86.60, we saw a high of 87.28 in the onshore market yesterday. No intervention was seen till we traded above 87.25, which gave a sense that we are probably seeing the RBI letting the rupee fall. But then, well, we did see some intervention. We saw some selling from the market as well. And then with news from global markets getting slightly better, I think rupee has also recovered to 87 levels, but does not look like it's going to make a very sharp recovery until we see FI activity getting positive. Yes, it does appear the stock market in India has also seen interim bottom on last month. So after the budget, it has actually tried to recover, but for the global news, it would have been at a much better level. Probably now is the time we see some recovery, and also with so much of selling that has already happened from FII's index falling by nearly 13%. I think it's time we look for some optimistic approach from FIS, which can actually support the rupee, and possibly even the exporters at a level which is 4.5% weak from what we saw late September, I think, and also premium above 2 rupees for 1 year. I think it's not a bad level for exporters to start hedging their exposures as well. I'm seeing some sort of a recovery in the rupee as well, unless the global news gets again negative. Thank you.
Thank you, JK. And I think the broad theme is that markets are now understanding how President Trump is operating, tariffs being used as a negotiating tactic to get something out for the US. So initially, after the bout of dollar strength, we have seen the great recovery in currencies and even in equities for that matter. Currencies like Canadian dollar, which had depreciated quite a bit against the dollar after the tariff imposition, have recovered, as JK mentioned, from 2.5% from its recent lows. Rupee also weakened past the 87 levels quite easily, opening just above that. We saw an intraday low of 87.28 post with some intervention from the central bank, and selling from the markets had it close a little bit lower. FI activities remain negative. So that may keep sharp rupee appreciation at bay, but I think the overall context to remember, and especially what JK had mentioned, is how much the index has already fallen, and the FIs have already sold a considerable chunk. So there is some sort of recovery that is possible in this particular theme as well. So that we'll keep an eye on. And that's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.